Hello, fellow traders. 'Tis I, the Rumpled One. Thursday, May 16th, the year 2019. Let's talk trading. Horizontal lines, opens. You're probably wondering, how much more can I talk about the opens? I mean, 3 days in a row? I mean, it's one simple line. I mean, how much more can there be to the open? Well, there's I guess there's a saying by Bruce Lee. He says he doesn't fear the man that's learned 10,000 kicks. You know, he fears the man that's, learned or practiced one kick 10,000 times, something like that. Point being is, if you just take one thing and you just dive into it and you master it, then you can really reap the rewards. And when it comes to horizontal lines and the open, you can really reap the rewards if you're patient. That's the biggest problem, or the biggest challenge, let's say, with trading horizontal lines, especially the open, because price moves away from the open, and sometimes it doesn't return to the open. And you might sit there for a really long time. Especially the weekly open. On Monday, it could just go, it might just keep going away from the open the entire week. Sometimes maybe you'll get an open cross later Monday, sometime Tuesday, maybe Wednesday, maybe Thursday. But the thing is, usually when you get those crosses, they pay off huge. But, that's kind of up to you. I mean, do you have the patience? Do you have what it takes just to sit there and wait? I mean, you can have the computer alert you with a ding or an email or a text message or something. But when you're sitting there, you really have to resist, the temptation to rush the trade or do something else or try and get in ahead of it. Because you'll only, or most of the time, let's say, you'll regret it. Just like if you don't use money and risk management on each and every trade, you will come to regret it sooner or later. It's going to get you. It's going to get you. So these simple equations here, how much are you willing to lose per trade? Position size, is that what you're willing to lose per trade over the stop loss, or the stop loss is what you're willing to use per trade over the position size? Some people like to trade the same position size, so their stop loss is always the same. Let's look at the chart here. Okay, on the fills, 1, 2, 3, 4, 5, 6, 7, 8. I don't remember what the count was yesterday, but the way it's playing out so far, it doesn't look like we're going to get too many more fills this week. But once again, it doesn't have to fill for you to be profitable. Oh, we've got a green day. You see here we opened above the previous day's midpoint. Hold just a second. Okay, back to it. So opens, we're under that yearly open and the monthly and the weekly. Now, once again, we've got that opening day range. Here's that weekly open here. And as you can see, there was some action here on Tuesday. It's Thursday right now. You can see we've touched that opening range low, barely penetrated it the first time, touched it the second time. And you can see how we're still in that range for the week. It's really interesting to see how prices, at least on the euro yen, is within that range for the week. I'm thinking maybe I need maybe there should be a gauge up here. I think I can use, I might have to do a separate gauge for that, because I think you'd have, I don't know if I could say opening range for the week. you'd have to every day change the bars back. So I might have to put that in there. I think that could come in handy to look for opening day breakouts. And back to opens, as you can see, we're under all of the opens. Every monthly open we are under. Now the inside bar from 2 days ago, you can see we're back inside it. Today we barely got through the bottom by about 3 or 4 pips. So that would have been a scratch trade. And that's why sometimes you just have to, you have to put that stop on. And then you just look at the price action, either stopped out or scratched that trade. And there's a couple other pairs here on the gray. That means it's within that inside bar. Showing another daily chart here. Today's open, yesterday's open. You can see we're in that upper wick zone, but we crossed that open. See, right now we're 5 pips above it. The previous day's open. An anemic day here, only 42 pip range, and the dollar yen's at 63. But look, only 3 pairs over 100. So when you see how anemic the market is, this is why I am taking those 5 pip wins, 3 pip wins, moving that stop to break even +1. So maybe I miss out on a run every now and then, but then I don't get stuck. Looking at the highest H1 open for today, right here you can see price didn't close above it, so you can, and it's basically ranging here. So by taking those shorts right there, here, produce some profit. But you can see, we're talking 5-10 pip profit. And then here we got close, fell out of that wick zone, and then you see prices going down once again. We had the pivot, short bias, so we ignored this. But actually, because the pivot was within the buy zone, really wasn't much of a bias. But here, it already hit the pivot, so this long trigger took off. We had a couple more pro trades here and another long trade here. We opened in the buy zone, and those were probably good for about 10 pips or more. So once again, those trades aren't anything to sneeze at. Rat zone, you can see very small separation, not really rat zone type trading, but you can do those rat reversals and you can still pick up some pips. But you should be getting in closer to the high or the low rather than jumping in right here. Once again, we took out the pivot. We still have 2 missed pivots way up here. It's going to take a while to get there. That's 200 pips away, just about, right there. Price action, as always. Wick zone, big wick zones, but price still is going in and out of the wick zone. Once again, the previous day open line, you can see all the crisscrossing right there. Some are scratches, some are profitable. And the tick chart looks like a tick chart. You can see the cross here. Good for about 4 pips at the moment. Once again, showing how sometimes you look at the price action, it starts to go against you. You just scratch the trade. Here is an example right there. It really didn't. It just closed barely above that line. this wasn't even breached. So right here, you could have stayed in the trade, or you could have gotten in right here. And right now, you're good for about 2 pips. And here's that weekly open, showing it once again, nowhere near it. And this is where the discipline comes in. And this is where, for this pair, it's just like if you're just trading a weekly open, you say, well, it's too far away. Don't even look at it. I mean, you can use the dashboard and find another pair in the weekly open. Now, I want to show you something else here about the opens. The line, the number on the top here is high to open, and the number on the bottom is open to low. And this is on a daily, so you can see here, you can think of this as using this with the buy zone or using this with the cross, but actually you should probably stick it on the weekly. We're going to have to change the indicator. And this is the TRO wick zones, but I've got so many indicators I had to stick it here because when I hit the F11 key, it stops at the T's. It doesn't go, it's got so many indicators that I've been working on. So I need to change that out. Let me move it just a little bit more. That's just the spacing here. Okay. So you see here, weekly open to low 120, weekly open to high 17. But you can see the size of these numbers. And sometimes they're small. But like here, sometimes they're almost non-existent. But for the most part, you can see just trading that weekly open can be very profitable. Extremely profitable. Now, there was another indicator I'd like to show you. And okay. And that's the TRO opens indicator. And it draws lines. It has alerts. See, I have it set for alerting on W1, and it, like you can have it to show all the different opens and give them all different colors. And this is an old indicator. Actually, I guess I updated it a little bit in 2016. Whoops, I thought I turned that other indicator off. Turn off true. So if we come down here to daily, we've got daily, weekly, monthly opens, and then H4, you can see the line starting to come in. And the indicator's smart enough not to put opens anything below, otherwise it gets pretty messy. And you can see here, when you're working with the M1, then you have all the different lines showing you. So this is an open line. You'd have to look at the colors, because I guess I should probably update it and say which open this represents. But you can see whether or not price is respecting certain open lines. Like the M15, you can see right here, there's an open. You can price didn't get above it. Well, and here, right here, new open, price isn't closing above it. So it just gives you an idea, or visual. But after a while, you can just see them without having the indicator. So that's it on opens. If you have any questions, feel free to post your questions, on the comments. Remember, you can find me various places on the internet. And as always, it's not what you trade, it's how you trade it. So get out there and drain the banks.